morning, good afternoon, good evening, wherever you're calling in from around the world. This is Doug Brunke of Global Chamber. We're very pleased to have a distinguished group of experts on talking about banking and financing for your global business. So if you are doing it today or you're thinking about doing it, you couldn't talk to a more learned group than we have assembled today. We're going to start out speaking with an executive who's right in the heart of growing a very exciting new business. They happen to be located here in the United States. Vinayak Gupta of Zero Mass Water is going to talk about his own experiences with his own company as they ramp up their operations around the world. Vinayak, thank you for joining us today, and we're looking forward to hearing from you.
Thank you, Doug, and thank you to all my co-panelists for giving me a platform to share with them, and looking forward to sharing some of my experiences with our viewers across the globe. First off, Global Chambers, what a world-class organization. I have worked with Doug for about a year now. I am new to the Phoenix area, coming from Silicon Valley, but in the past year, when I became known to him, or he became known to me, I have learned a lot as to what Global Chamber means, and I think it's an essential cog in the wheel for young and upcoming companies to be able to expand and go to a resource where not only you have knowledge capability available, but also experts available. Doug has helped us tremendously in finding variety of ways to solve our business challenges. So a big thank you to Doug for organizing this event first. Thanks. So like you said, Zero Mass Water. I'll take a minute to talk about Zero Mass Water and then dive straight into financing for growth. Zero Mass Water is it's quite simply our business is to make drinking water out of thin air. The company is based out of Scottsdale, Arizona. The company is about 3.5 years old. It's a young global company growing extremely fast, extremely rapidly. So the topic of talking about how do we finance growth is very pertinent to us. We are now in 12 countries at this point in time. Quite simply, our mission is basically to be able to enable drinking water independence for humanity. As you may or may not know, and it's just starting to come in the collective conscience of the world, that drinking water or water in general is the greatest crisis that humanity faces. So our company's mission primarily is, doesn't matter if you're the King of England or if you're a woman walking 6 miles a day, 6 hours a day in Africa to fetch water, you have access to same water, which is the purest form of drinking water available at any given point in time. That's what Zero Mass Water does. Like I mentioned, we are in about 12 countries now, going in 15, growing very, very rapidly. So it is essential for a company like us to have global financial partners, and one of my co-panelists, Marianne from Exim Bank, is a huge partner for us, and I'll touch upon that in just a moment, to be able to grow our operation and sustain our operations. So how we look about financing in a quick nutshell is, what are the activities that are required to grow the operations? Number one, where we need to be able to raise either debt finance, project finance, or work with our banking partners, and what are the activities that truly require an equity capital or some sorts of warrants, notes, or non-traditional methods of financing. Pertinent to this forum today, where we look at working with our financing partners, is things like working capital finance for account receivables and accounts payable financing globally with our customer base, inventory financing, capital equipment financing for expansion, facilities expansion financing, and project finance. So those areas primarily fall within the scope of where you would go and raise some sort of debt, be it short-term, long-term, or a combination thereof. In terms of working capital financing, like for an example, if I have a customer sitting in Lebanon per se, and I ship heavy-duty equipment from here, Scottsdale, Phoenix, or Arizona, that's going to stay on the ocean for about 3 months before it reaches the customer, and then the customer looks at what to do with the goods by the time they're ready to accept. It's a good 3 to 6 months process before you start getting paid. So how do you finance your operation from that perspective? Therein, what happens is, for a company like us, we partner with Exim Bank, we partner with local banks, depending on where we are going. If it is for export, then Exim Bank is a huge partner wherein they can allow you to borrow against your inventory or borrow against your account receivable as soon as you have a PO from your customer. So that allows you to not burn your sweat capital or equity capital and be able to have capital available for you to continue to sustain operations. That's one area. Inventory financing. As the business grow in the infrastructure companies or any widget making companies, capital is required to build inventory. Again, when you start growing, there will be a heavy duty focus, and there is a heavy duty focus in our business to be able to have some inventory on stock before you start shipping heavily. So how do you finance that inventory? Then you work with the banking partners, like in this case, for example, to a degree with SBA or with mid-size and large banks which are global in nature. And again, the entities like Exim Bank come into play, where we can have short-term financing capability available to finance that inventory. Then you talk about short-term to medium-term financing, and that is to a degree applicable to capital equipment finance. So when you talk about expansion, as the businesses grow, there is a burden on the corporation to be able to sustain its operation and grow its operation. So the choices that we have is either we use the equity capital or we figure out a way to have a vehicle that allows us to raise debt. So capital equipment financing is a vehicle where, depending on what the ask is, you can go anywhere from 6 months to 3 years to 7 years financing. So one of the mechanisms that we use is we work with our banking partners to raise manufacturing expansion loans, which can term out anywhere from 1 year short term to 3 to 7 years to be able to allow us to do capital equipment financing, and then that plays out into our growth strategy. Same goes for facilities expansion from that perspective. And last but not the least, when you are doing large infrastructure projects, especially if you are, think for an example, in our case, when we put out our technology, they tend to be large scale projects. And for that, you have to have project finance. By project finance, I mean, it's a combination of working capital, inventory, and the duration of the project that needs to happen, and the financing required during that time to be able to culminate the project to its success, again, without overburdening the balance sheet of the company. That requires a company like us to raise some sort of a combination of financing revolvers, or short-term loans, and so on and so forth. Those are the primary areas, folks, where we leverage our banking partners very heavily, both domestically and for export orientation. Typically, what we do in other areas like R&D, SG&A, new business development, new country expansion, we use a combination of equity, warrants, notes, and long-term debt, depending on the strength of our balance sheet. And then combine that with what's available in terms of incentives and grants, where we are expanding either locally in the country or elsewhere in the world. So hopefully that gives you a preview of what Zero Mass Water is, and how we are trying to manage our accelerated global expansion. And look forward to talking with you during the panel. Thank you, Doug. I think you're on mute.
Oh, can you guys hear me?
Yeah.
Okay, great. So just for further clarification for everybody, which I thought that was really an excellent lead in to our next speakers as well. You make a product, and you make that product here in the US, and you're selling it currently around the world, and your goal and your expectation is you probably will have operations around the world as well. And so that'll further complicate your funding and requirements, I presume.
That's exactly right. That's exactly right, Doug.
Yeah. So, but I know you're smart enough and you're good enough and people like you, and also, and I, by the way, thank you for those kind words. And one of the coolest things about what you guys do is, I don't think you mentioned it, but these guys at Zero Mass Water in Vinayak, they took over a dealership, a car dealership that had closed, and they built within the showroom. They have their executive offices, and then in the service bay, and I happened to walk through it by accident. It's a world-class manufacturing facility in a Volvo dealership service bay. So these guys are off the charts creative. So Vinayak, congratulations on your success so far. I know you're going to kill the world in a good way.
Thank you, Doug. Really appreciate it.
So the next speaker, Vinayak referred to the banking industry, and I don't know very many bankers that are as good and solid as Kevin Hull of BMO Harris Bank. He's going to be our next speaker. He's going to talk about some of the instruments that are out there and some of the ways that companies can use the banking industry, and BMO Harris is one of the top to be able to facilitate their growth. Good morning, Kevin. How are you?
Good morning, Doug.
Hi, how are you?
I'm doing great.
You're calling in from Scottsdale where it's snowing heavily, I think, right? Or not?
You know, it's cloudy and 65? Yeah, it's a rough day, unfortunately.
Okay, so.
But heading to 90, right, Mike?
Yes.
Well, great. Well, thank you
for
for the opportunity.
today.
Thank you for the opportunity, and great lead into some of the things we want to talk about today. I always enjoy talking to business leaders about the international marketplace and doing business internationally. I've had the pleasure for the last 20 plus years of working with a variety of companies at different stages in terms of international business. Some were just getting started, some were exploring the idea, some were seasoned veterans in it. And CZ, if you can help me with the PowerPoint, maybe go to the next page. I always ask folks, what is it that got you involved in international business, or what is it that is causing you to take a hard look at expanding your business internationally? And the responses that you see on the screen here are probably the most common responses that I've received. With diversifying the client base and diversifying the revenue stream being kind of the main reason companies take a look at doing business internationally. Many companies perhaps have either reached the saturation point in their domestic market, or at least gotten as far as they want to go domestically and now want to expand that business into other markets. There is a chance for them to develop some synergies, access talent in different markets, leverage that talent, and grow from there. The other thing that's been driving folks to take a hard look at the international side too is competition. They want to stay ahead of their competitors. They want to get to those markets before their competitors do. So it's kind of an offensive play, but there's also a defensive play as well. That being the other companies, other competitors may be in that marketplace, and a client may need to get there as well, because the risk is this: if there's a buyer out there and that buyer has a choice of doing business with a company that can fulfill the domestic needs as well as their international needs, compared to a company that maybe only can fulfill on the domestic side, that creates a bit of a risk. So to help mitigate that risk and drive more revenue and access markets, clients will look to fulfill on the international side. So before we get into kind of the financing topics, that kind of just gives some background on why international is a great way to expand a business and grow a business. But with opportunity comes risk. And Caesar, if you wouldn't mind, well, you're already there, thank you. On the risk side, obviously payment risk is the first thing that jumps off the page for a lot of business owners. If I'm going to ship a product or provide a service, how am I going to end up getting paid? We'll talk a little bit about that in a moment. Currency risk, if you're buying or selling product and the party on the other side wants to get paid or remits in the host country currency, that does create some potential challenges, and there's ways to help manage that risk. Obviously, regulatory and compliance. This is one that comes up a lot, as well as it should. And we just, Mr. Gupta just alluded to this, access to working capital. And we're going to talk a little bit about some ideas on that. So opportunity does lead risk, but lead to risk, I should say. But all these risks can be managed. And quite frankly, the best way to manage these risks is to build a team that has international experience. And that team, at a minimum, it does need to consist of a banker, lawyer, accountant, someone from the insurance side, someone from the logistics side. These are very important topics, and you really need to make sure that the partners at the table there have that international experience. The other thing, and this is not a shameless plug for Global Chamber, but I believe it with all of my heart, is that you really need to network and get connected with other international business leaders, and the Global Chamber provides a great forum for that. It gives you a chance to connect and learn from other business folks who may be further along in their international experience. Gets you connected with other service providers as well that can provide insights and assistance with these different topics that we just went over. Another one that's very good and sometimes gets overlooked is this is a part of the Department of Commerce, is the U.S. Commercial Services Group. They have offices throughout the U.S. and they have been instrumental in helping clients get connected to the right information in different international markets and provide some really good insights as well. This is a group that sometimes gets overlooked, but if you're investigating or looking at an international market, one of the things I really encourage you to do is connect with your local U.S. Commercial Services representative and have a chat about what you're looking at doing. So let's talk a little bit on the banking side, if you don't mind. Again, Mr. Gupta referenced this, and it's great. You got a product or a service, and you're going to send this thing out to a new client on the other side of the world. When we stop and think about it, it's going to take a month to ship it. It's probably going to take 30 to 45 days to get paid. And I got payroll to make tomorrow, Friday, right? So how are we going to cover that gap? Domestically, you cover it with a line of credit. And when you look at the loan agreements, it says eligible receivables, domestic eligible, and eligible inventory, domestic inventory. What are we going to do if it's international, right? That is where the programs at Exim Bank, as well as the SBA Export Working Capital program, come into play. Our bank, BMO Harris, is involved in both of these programs. I personally work more on the SBA side, but we have a group of professionals that work on the XM side as well. Outstanding programs. You're going to hear from two speakers in a little bit. But these programs have plugged that gap to allow companies to fund working capital needs so they can get those products shipped, make their operating expenses their payroll expenses, and then when payment comes in, line gets repaid and it revolves and goes from there. So it's an excellent way to support that working capital and grow the business. The other thing is, if we're exporting something, how are we going to manage the credit exposure? We don't know that party on the other side. Or maybe you do, maybe you don't. There's different things that we can do to help manage the credit exposure the domestic client is taking with a new international client. Recently, it's probably been about a year now, but had a client who brought in a new relationship or is working with a new relationship in UAE. Product orders for about $800,000-$900,000. Our client wants 50% down because they don't want to take payment risk. The party on the other side is like, if I give you half of the order, how do I know I'm going to get my product? So kind of at a standstill, right, at that point. So what we've done, and Pellson, I think you've actually helped me on this one, was we provided what was called a payment guarantee letter of credit, where we issued a letter of credit on behalf of our customer to the party on the other side, stating that in exchange for that 50% deposit, we will give you a letter of credit, and if our client does not fulfill that order and ship product, you draw on that letter of credit and you get your deposit back. So what that did is it bridged the gap, right? There's a bit of a trust gap, not because they didn't like each other, but because it's the first transaction, and you got to protect yourself on both sides. So a client got their deposit, started the process, shipped the product, and everything worked out the way you expect it to work out. Time has gone by, and other orders have been placed, and they're at the point where that trust has been established, and they're working together very nicely, and it's helped growing from, you know, an $800,000 order to now they're probably doing $2 or $3 million a year with these folks. So that was a way that you can step in, help out, bridge that trust gap, and protect both sides of the transaction. Now, the other thing that, and we don't have a lot of time to get deep into this, but we can talk a little bit about is currency risk and how do you manage that. And this works on both sides. International is a two-way street. You can export product or you're going to be importing product. And it does create some challenges there, which we'll talk about in a little bit. If you want to go to the next page, Caesar, thank you. On the currency side, and let's say you're an importer, most of our clients prefer to get paid in US dollars. And the reason for that's pretty obvious, right? They don't want to take the risk of converting currencies and managing that risk, and quite frankly, it's just easier from a billing standpoint and what have you. What we've noticed over time, though, is someone is taking risk on that. So if we're importing a product and we want that in US dollars, the party on the other side is going to add some margin, right? They're going to mark that up because now they're taking the risk to convert it. Sometimes that markup's reasonable. Sometimes it's a little up there. So what we've done with clients is ask them to do this, is if you're importing product, have your vendor, have your supplier send, quote the product in two invoices or dual quotes, one in US dollar and one in whatever the host country currency is. What we do then is have our foreign exchange team take a look at that and then figure out, is there some economic benefit of size that makes sense to go ahead and have that invoice in international currency, whatever the host country currency is, and then we help our client manage that risk. What we've seen is more often than not, I'd say 6 out of 10 times, there's about a 3 to 5% savings in the cost of goods when that currency or when that invoice is in the international currency. So put that in perspective. Let's say if you did $10 million of cost of goods in a year at 3%, you're bringing $300,000 to the bottom line just by taking some time to go through and checking out these invoices. $300,000 to the bottom line, what does that mean in terms of value? A lot of people like to use a multiple of 5 or 6 of EBITDA to figure out a value. $300,000 of found money to the bottom line multiplied by 6 is a $1.8 million value. So there's some real significance in terms of profitability, cash flow, and value if you take some time and take a look at the differences in the currency and seeing if there's enough margin there to take on that international currency. So obviously you're shifting risk. If you do that, you're taking on the risk versus your client. But what we do is we sit down and we help companies manage that risk, whether it's hedging or some other techniques. We're not involved in exotic hedging strategies with clients, but very basic, simple, lock in an exchange rate. That way your margins are protected. You're not going to go at a lower margin. Not going to get the upside if the market moves the other way, but you're not going to get hurt on the downside. And that's worked out very, very well for most companies. So I'm going to pause there, Doug, and turn it over to the next speaker.
Appreciate that, Kevin. Both Kevin and Vinayak are hanging on. Vinayak is the Chief Operating Officer of Zero Mass Water. So if there's any members out there, I've already received an email by one of our members who wants to meet with Vinayak, and so we'll work through that. Kevin, is available for everybody, and so if any of the speakers are people that you'd like to circle back, send me an email at info@globalchamber.org. I'm happy to help and make sure that good things happen. Speaking of good things happening, Marianne Hughes is on the West Coast today amongst the rain, and she is calling in from Irvine, California, where the Export-Import Bank is located in Southern California. Marianne, thanks for all that you do for exporters in the West and across the United States, and we're looking forward to hearing more about what you're doing and what you're involved with and how you help them import more.
All right. Well, thanks. Thank you very much for the opportunity, Doug. Great to be here. I'm Marianne Hughes with Exim Bank's Western region, and we cover 11 Western states from our region here. And Exim Bank was formed with one purpose in mind, and that's to increase jobs through exports. Exim Bank is all about reducing risk. If we could move back to that original screen, thank you. We've seen that U.S. companies will do much more in exports if their risk is reduced. What's not so widely known about Exim Bank is that 90% or more of what we do is insurance. We're actually an insurance agency for U.S. exports. It's a federal agency. We cover the risk of non-payment that U.S. exporters and lenders take on their international business. Now, we meet companies all the time, large and small, that tell us that they have a hard enough time getting paid by their customers in New Jersey, let alone New Delhi or even New Zealand. So frequently they require cash in advance, which can mean lost opportunities. So we don't want to see any U.S. firm miss a good opportunity just because of the payment terms. With our insurance, the exporter can get the sale, extend open account terms with the insurance that Exim Bank will cover them if their buyer does not pay on that invoice. So now we're at the next slide. It would be our export credit insurance. And here you see the main events that can cause a non-payment. We'll cover non-payment caused by both commercial or political risk or political reasons. Now, depending on the policy that the exporter takes out, we will cover both categories at 90 to 100% of the invoice. For example, with our small business policy, the cover is 95% for both categories. The terms that can go out to the customer can go up to net 180 days and longer for capital goods or for bulk agricultural equipment. Next slide, please. Now we have a lot of options for U.S. exporters. We've got multi-buyer policies that can cover all of the exporters' foreign credit risk. We also have a single buyer policy that an exporter can take out just to cover their sales to one buyer. The policies can be used by any U.S. exporter that exports products consisting of 51% or more U.S. content and that are shipped from the U.S. Now, for a lot of reasons, our small business policies are the most popular of all. There is no deductible, they have low rates, and very high cover. With our small business multi-buyer policy, an exporter can cover all of their foreign accounts receivable, and the cost is slightly higher than 0.5% of the invoice amount. So as an example, a $10,000 invoice could be insured with a premium cost of just $55. That would get the exporter cover of 95% of the invoice amount, and that would be for no matter what country the exporter is selling to. For less experienced exporters, we have our express policy, and with that policy, the exporter can add a buyer, and they can do that by just giving us the name of the customer, and we'll run the credit report. Now, savvy exporters use these policies as tools to help them become more competitive in the marketplace and really ramp up their international sales. Next slide, please. In addition to risk protection, the insurance can also be used as a catalyst that enables the exporter to obtain advances on their foreign receivables from their lender. Now, Exim Bank has two other key programs available to U.S. exporters. Our working capital guarantee program can be used by the U.S. exporter to finance their exports. The majority of these lines are done as a revolving line of credit. The program can also be used as a transaction-specific line that would provide funds needed to fulfill a large new order or a contract. All of these lines are done through the lenders that work with Exim Bank. The exporter applies directly to the lender, and the lender provides the financing. We guarantee the lender. So we're fortunate to have one of those lenders, BMO Harris, on the line with us today. The third program that we offer is for companies that are exporting capital goods or equipment. Our medium-term program can be used. That would enable the foreign buyer to get a term loan. And the great thing about this program is that the exporter gets paid upon shipment. Now, when it comes to exports, our mission is really to help you increase your sales. So on the next slide, you'll see my contact information. If any of these programs might benefit your firm, please let us know. We'll get your questions answered so that you can access these tools that are offered by Exim Bank. Thanks.
Thank you very much. Thank you very much, Marianne. One of the questions coming in? What's the pricing? You know, how would you describe pricing for the programs that you're talking about?
Well, the pricing, probably the most economical pricing would be for that small business policy. And that policy is for companies that meet SBA's definition of a small business. And the rate is 55 cents per $100 of invoice amount. So for that $10,000 invoice, the cost would be $55, and that price would be for terms all the way out to net 60 days.
So that's less than what a private company would be able to do. I mean, is that really kind of the value of having the U.S. government behind, you know, the support of what you're doing?
Well, the key reason that Exim Bank makes these policies available to small businesses is because their volumes might not be quite as high as larger companies, and they might not get the volume discount. So with this pricing that we make available to small businesses, it's really makes it very economical for the small business.
Okay. And one of the things I've heard some people say is that Exim Bank is for the big companies, but it's actually quite the opposite, isn't it?
Good point. That's quite the case.
Gotcha. So let's we'll come back to you. Speaking of small companies, the Small Business Administration and Pellson Lau is calling in from also rainy Los Angeles, but a different part of the basin. Pellson probably doesn't remember this, but I actually met him about 10 years ago when he gave a presentation in Santa Clarita, California, the very northern tip of the basin there. Was very impressed by his knowledge then, and he's got 10 more years of experience working with small businesses around California and the United States. Pellson, thank you for sharing today from your perspective on, and I know you're going to talk about the Export Loan Guarantee Program and other things that the SBA is doing.
Thank you, Doug. Thank you for your kind words. Yes, first of all, I want to thank the Global Chamber of Commerce, for having SBA to participate in this webinar so that I can have an opportunity to talk about the SBA Export Loan Program. As you can look from the slide, here you can find my name, my contact information. Next slide, please. I work for the Office of International Trade of SBA, AKA we call OIT. OIT is a special task force or unit to focus on promoting, helping companies to export through the SBA Export Loan Program with up to 90% loan guarantee to lender. Nationwide, OIT has 21 field offices, mostly located with the U.S. Export Assistance Center. to support our effort. I'm kind of one of the 21. I cover the territory of Southern California and the state of Arizona. Next slide. So here's the list of the 21 people. So basically, probably you can read that, but I can email you a PDF file so that you can read those 21 people. In any case, if you have any question, feel free to contact me. I can help, and I'll connect you to the local office there. Next one. So slide number 4 basically gives you the highlight our effort. I want to particularly mention about our local support. Basically, we provide local support training to bank to making and servicing the export loan. And at the same time, we work with small business, provide support to their export opportunity by means of counseling, educating them with the SBA loan program, and so collecting with the lender who participate in our export loan program. Next one. So I think this is really important. I think we talk about SBA export loan program. So I just give you the definition about SBA export. Basically, when we say export, we refer to any product or services must be exported away from the United States. So any drop shipment will not be eligible. When I say drop shipment, basically saying that, let's say you have a manufacturer in China and then the product shipped from the China directly, to your customer in EU market. So this is, we consider drop shipment will not be eligible for export. But another thing I want to mention that, for SBA, we don't have a U.S. content requirement. Basically, as long as the product shipped from the United States, that can be considered export. And even though there may not be any U.S. content there. And one other thing that I want to mention about the indirect export, indirect export to us, we consider export as long as you can, as you can look from the slide, as long your customer can get a certification from their buyer saying that I'm buying their good actually for exporting to other markets. So that can consider the export. Next one. Next slide, please. Okay. So this is what we call the SBA Export Loan Program. Actually, there are 3 loan programs. The first one is called Export Working Capital Program, EWCP. EWC is a revolving line of credit, can be up to $5 million for 12 months, but can be renewed every year. Basically, for EWCP, the way it works is basically the loan disbursement is tied with a purchase order or maybe underwriting asset. So basically, you mean that, even though, at the time that loan disbursement, there's no account receivable, no interest, it still work under our program because we tie with specific, what we call a specific export order. So in another case, we can consider either PC program as a pre-shipment financing or maybe as well as post-shipment financing. So the other program for international trade loan. International trade loan is a term loan, and the term can be up to 25 years, depends on the use of proceeds. The way it works that, for example, you have a company, they want to buy an owner-occupied building or maybe equipment. The purpose of that, let's say, I want to increase my export sales. So in this case, the lender can put that loan under the international trade program, can get up to 90% loan guarantee. The third one, the export expense, it basically is a smaller amount. It's a combination of both, like either BCB, international trade loan, but the loan amount can be only up to 500,000. So basically, this is just to give it some kind of highlight about the SBA Export Loan Program. That's all for my presentation.
Really appreciate that. Really good conversation. I want to also emphasize there's people calling in from all over the world. So the last 2 speakers have spoken fairly U.S.-centric because that's what they do, right? The Export-Import Bank of the United States, and Pellson works for the Small Business Administration of the United States. Why I think it might be very valuable for you, even if you're calling in from a place like Kuala Lumpur, as an example. The Malaysian Investment Development Agency is a member of Global Chamber. We work with them on either side of the Pacific Ocean, and they have similar initiatives for if you're a Malaysian company. So what you've just heard, if you're a U.S. company, is right down the middle in terms of the opportunities that you have as an exporter. If you're in Malaysia, there are resources like the Malaysian Investment Development Agency that you should be reaching out to, or MIDA. So let us know wherever you are. If some of the programs are interesting for you, no matter where you are, we'll find a way to get there for you. That's the value, as we've already heard about Global Chamber. It's a community of people around the world who are involved with global business, and we'll get the resources that you need no matter where you are. So I'd like to circle back then on, now that we're in the Q&A section. One of the questions is for Kevin Hull of BMO Harris Bank, and the question was, what are some of the hurdles that you see that clients are struggling with, and then what are some of the resolutions for those?
Okay, thank you, Doug. That's a good question. I guess what I've seen is it's kind of you don't know what you don't know, right? Most business owners, it's trying to find a way to finance that working capital gap, and they're not aware of the services that are available from Exim, or they're not available but not aware of the services that are available from Pellson's group as well. And there is some, misnomers out there. I think you mentioned it. People say, oh, Exim's the bank for Boeing, and that can be farthest from the truth. It helps small to medium-sized companies. When people hear the word SBA, they tend to take a step back and think, oh gosh, it's bureaucratic, it's a lot of paperwork, it's this, it's that. And those are, quite frankly, myths. We've worked directly with Pellson's team, and I have to tell you, and this will be a testimonial for Pellson and his team, they are incredibly efficient, responsive, and extremely helpful in putting working capital programs together. So I think once the myths are dispersed and you get involved in the process, it goes very well. So that's finding a solution for that working capital need is one of the top things that business owners need to do, and they just need to be advised and get access to this kind of information, and it serves them very well. The other thing that they bring up a lot of is fear of the unknown in terms of regulatory, complying with laws, whether it's our laws in dealing with exports or whether it's the host country's laws dealing with reporting and disclosures and taxes and things like that. That gets back to the thing I mentioned at the beginning of my segment, is you really need to form a team of folks who are very experienced in that marketplace, and they can make sure you're prepared and set up the right way so that you stay in compliance on both sides of the transaction then.
Vinayak, you have had multiple experiences with different businesses, and now you're herding cats, if you will, in terms of like things are coming at you a mile a minute. So kind of building off of what Kevin just talked about, not knowing what you don't know, and I think the other aspect of it is that of all of us, right? Our lives are very busy. Our business lives are coming at us at rapid speed. There's a lot of things to worry about. How do you kind of get your hands around that as running a company, and then particularly in the financing world, how do you stay on top of making sure that you can pay the next payroll and amidst all of these challenges?
No, totally. Thank you, Doug. One of the biggest things that what Kevin just emphasized, I can't emphasize even more, that planning is the essence of everything for us. Plan, and then execute to the best you can, and not really knowing what you don't know. That's key. A particular example I'll give you. Just earlier this year, we started our business in Australia, and one of the things in Australia is just starting to, metaphorically speaking, in our world is catching like wildfire in the world of water. It is a phenomenal market for us. So really figuring out how to go penetrate a market and really having all these tools available to us early on during the business to be able to plan, like having the relation with Exim Bank, having the relationship with SBA, and having global banking partners that allow us to have access to the vehicles that we know what would take us to construct a project to be successful allows us to stay ahead of that. I'll tell you, if the Australian contract had come to me about 6 months ago, I don't think I would have had the luxury to be able to use the resources available to me at this point in time. And I would have ended up using the very expensive equity capital versus now I have multiple vehicles in terms of putting the credit insurance in place as soon as I know who the customer is, even before my goods are shipped on the ocean, which takes the longest lead time, and having the ability to work in the background with relationships like Exim Bank or another bank from that perspective to be able to secure the credit for the customers allows us to sustain the business. So that's kind of how we think about this, but we can never stay ahead enough.
Gotcha. Another thing that Kevin talked about was currency fluctuation and the risk related to that. Is there anything that you can relate on that side of things? Do you focus mainly in dollars, or do you take foreign currency and then use ways to hedge the risk?
At this point in time, we are focused on US dollars for sure. But I think to Kevin's point, where he is absolutely right on, in my previous experiences, I was always dealing in the local currencies, because what he said, the inventory or just the procurement alone can give you a 2 to 5% or 3 to 5% depending on where you're buying from. It gives you a huge uplift. But at this point in time, given the scale where we are, it is not possible for us to deal in multiple currencies. Having said that, that's definitely part of our future.
Okay, that makes sense. You're a Silicon Valley guy. I think it was Elon Musk said that, don't do a business plan, right? Just kind of, do the right thing kind of approach. And so you talked about planning. More of an act, that kind of a thing. Do you actually do a plan, or are you talking, when you say planning, are you just saying you've got mechanisms of just kind of staying ahead of the curve?
Combination of both. Do a plan for sure. You have to. Otherwise, it's not possible for you to be able to create, forget a long-term, even a short-term vision. So you have to be able to do that. That's critical. Typically, like, we go into an annual operating cycle every fourth quarter, which is exactly what we did last year. Set a plan for 2018, and then obviously the plan will adjust. Plan will move. There is no issues from that perspective. Once you do that plan, you to a fair degree as to what are the vehicles that you will require, where you will need the most help outside of just what is within controls of your four walls. Like, for example, I got to be able to put a global credit insurance in place. I got to be able to go raise an LC. I need to be able to create my balance sheet strong enough, either by raising equity capital or having a working capital or a capital expenditure loan ahead of time once I have a plan, to be able to go culminate that plan into successful execution. So it's definitely setting the plan first and then figuring out what are the gaps and tools and capabilities that we need to be able to execute that plan to some degree of success.
Very good. Another question that's come in is, and this is Pellson, this is for you. Does the SBA International Trade Team advise on IC DISC?
IC DISC, you mean yes, we do. Basically, I think IC DISC is the way that, there's some advantage with respect to the tax,
Okay.
Yeah,
and
now I think the as you know, that there's a change the corporate tax rate now from like 35% to 21%. So as I learned from the CPA, probably the advantage for having the IC tax might not be that attractive now, but we'll see. We will get more information on that.
I see. How, and this is a question for all the providers of services that are speaking, Kevin and Marianne and you, Pellson, is how should an exporter approach, the whole financing world? I mean, you offer the export loan guarantee, and Marianne's got the insurance, and Kevin as a banker has access to those and more. So how should an exporter kind of stay abreast of what's available, what the changes are? Do they need to, let's start with the SBA. I mean, should they be working with you? Should they be working with one of the people on that list of people, how would you recommend an exporter handle it for their own business?
Basically, I will always suggest, the exporter talk with their bank first. If not, they can always, come to me. So basically, as you know, the exporter is not in the area of financing. So probably they don't know much about the detail about which program. So I will more than happy to kind of assist them, to kind of educate them, to see which program is good. And also, it's good that I can also connect them with the active lender like BMO Harris, like Kelvin. They are active in our program, so they know that they can talk to the right person with respect to financing. So either, you can talk to me, talk to the lender, or maybe talk to a local SBA office, or even talk to you, Global Chamber. It's good. Or talk to Exim Bank. It's good. They can, because we all well connected as export community. We're just out there to help.
Okay. Oh, that sounds good. Marianne, you handle, you said, what, 17 states across the West, and I know you get involved in a lot of different things. You mentioned someone earlier before we started, of someone who handles Orange County that I'm not aware of. How does an exporter, how should they connect in? Do they come into you? Do you then hand off to someone who is kind of local to them, or how does that work?
Well, that would be one good way. If someone has my contact information, I could steer them to the right contact. Also, on our website, you can find a link to all of our offices to find the closest one to the nearest office.
In LA and New York and Savannah, Georgia, so how does that kind of work?
Sorry, Doug, the part of your question was cut off. I couldn't hear it. Sorry.
If we've got an exporter who's in LA and in Savannah and in New York, how would they deal with the Export-Import Bank?
Well, I think probably the best way would be to contact any one of us, contact me, or go onto our website and look for that office. We have an office in Miami that could cover the Southeast region. Our office here in Irvine covers a good part of California. So if contacting any one of us, and we can get you to the right person.
Okay, great. That sounds good. And then, of course, outside the U.S., for your local Export-Import Bank, let us know, and we're happy to connect you up if you're having any trouble, from Peru or China or any place in Europe or any place in Asia, honestly. So, or Australia, let us know. Kevin, BMO Harris Bank is, the Bank of Montreal, right? So, but you guys are across the United States in some cities. So how do you work with exporters that have multiple locations?
What we typically do is work with the office where the corporate decision makers are located. So if they're based in Phoenix, obviously we work and serve them out of the Arizona offices here. What we'll do too is work with our cross-border team, since we have 600 offices in Canada and 500 here, or actually 900 in Canada and 600 in the U.S. We have a cross-border group that can facilitate credit needs and treasury needs on both sides of the border then. So we'll work as a team and make sure the facilities are in place and simplify the banking experiences for clients who operate on both sides of the border there. If we have a client domestically with multiple locations, again, you want your company decision makers, your client decision makers with easy access to the banking partners. So if they're headquartered in Chicago, we'll work with our Chicago team and have them take the lead on it. And we'll support local offices out here then if they have subsidiary offices here in Arizona. So a bit of a team approach, and we adjust to what the client needs are, and what makes their life easier as well.
Gotcha. What are you seeing out there right now? There's a lot of little bit of global turmoil. There's certainly a lot of questions around trade. There's issues, with some countries. The United States, Peru has, a leadership change that's happening right now. How for the exporters that you're dealing with, how are they handling what's going on out there, or are they just kind of just moving forward and getting stuff done?
You know, they're moving forward and getting stuff done, but they recognize that the challenges and risks are out there. And, you know, this kind of gets into the planning process that Vinayak mentioned. And I fully support that and agree to it. There really does need to be, you know, planning that's put in place, at least on an annual basis, with frequent revisits to that plan. And not just having a plan on the business or strategic side of it, but also a financial model as well, especially as things are changing so much in our world today and on the international side. You can identify variances to plan quicker and make adjustments to those variances before you know, too much time elapses. So from an exporting standpoint, we haven't seen tremendous impact yet in some of the turmoil. After today's announcement, there may be more to come, but again, it's identifying those risks and sitting down with your team of experts and putting together strategies to minimize that risk. We have seen impact for our clients who import. I'll give you an example: lumber. You know, we're all aware of the difficulties in dealing with the lumber between U.S. and Canada and the tariffs. We've seen customers' prices increase. Our clients aren't big enough to go direct to the mill and negotiate terms, so they're buying from an intermediary. Their prices have gone up. It's affected margins on our clients. So, and our clients deal with a lot of large retailers and large other manufacturing, so it's not easy to pass on price increases, right? And it takes some time to do that. So that's where we've seen some impact, and you know, we've helped mitigate this by making sure these clients have line of credit facilities that are right sized and allow them to go to that lumber supplier and say, okay, you're giving me 30-day terms and I'm paying, you know, X dollars per foot, or whatever the measurement is. What if we pay you in 15 days? Can you give me a 2% discount, a 3% discount, or whatever? They use our line to go ahead and make that payment on the 15th day. My pricing is a lot less than what they're getting paid. So they're going to end up with a much better rate of return and help protect their margin then. Those kind of discussions are becoming more and more prevalent, and they're going to be even more prevalent if we start seeing tariffs imposed on products coming in to this country. So more to come on that, I think.
Gotcha. Pellson or Marianne, are you seeing any change in people's behavior, or are they just plotting moving forward? I presume that the kinds of programs that you have are actually, because they're kind of mitigating a lot of the risk, you should be seeing quite a bit of an uptick in activity.
Yeah, Doug, I think I would say the same, that I'm seeing exporters moving forward as usual. However, I think it is increasing their concern about the risks that they encounter. So I think we are seeing an uptick in interest in covering those risks, including the payment, not risk of non-payment.
Gotcha. Vinayak, we'll close with you. I mean, as you kind of look at the landscape right now, how is that landscape impacting you as a business leader? Are you taking extra precautions? Are you what kind of things are you thinking about right now as a leader?
Yes, Doug, thank you. So absolutely, it's impacting us. There's no question about it. And again, I keep going back to my planning mantra as best as possible. So just to dive a little bit deeper into that, having an annual operating plan is key. You start with that, and then you figure out, for example, if I'm importing something, I'll talk about importing, and then I'll go into the export world after that, because importing is more impacted than export at this point in time from my vantage point. Steel and aluminum tariffs, although there may be a carve out to that coming out that just got announced, and I'm going to learn about it in the next week as to really how to mitigate that circumstance. Those are some of the big ticket items that we always look at. So once we have created a plan, what we do is we look at what is our global commodity requirement or global import dependency, and where are we importing it from, and to a degree where we can influence, we try and keep an eye on what has been the trade relationship with that country. Most notably, China remains the most contentious. Can you guys hear me?
Yes.
Okay. Most notably, the relationship with China remains most contentious, where there is a tit for tat or a quid pro quo sort of tariff retaliation across the board. So I have been conditioned well in dealing with this for the past 10 years, having worked in solar prior to coming to Zero Mass Water. How to put strategies in place that allow you to secure your supply chain, supply routes, and deal with those kind of things. So for us, it's very, very critical to keep an eye on what is our global commodity landscape first. What are the items that we are truly importing to be able to culminate our manufacturing, and then be aware of the trade agreements, be it NAFTA or be it bilateral treaties, to be able to have multiple supply chains available at all times for us to be able to execute and not lose the margin of the business.
Thank you very much, Vinayak. Thank you too to Kevin, Marianne, and Pellson. Thank you all for your thoughts today. Really appreciate that. Again, if anyone needs to contact any of the speakers, let us know. info@globalchamber.org. Special thanks to Cesar of Global Chamber for organizing this. And thanks to Mike Langley in the Global Chamber Phoenix chapter for your special efforts today to make sure that our audience there in Scottsdale was able to watch the event today. Around the world, we appreciate everyone's interest in global business, involvement in the global tribe. We, building on Vinayak's comments about NAFTA, some of our next events coming up include a conversation on May 15th about NAFTA. What are the next steps, not just with NAFTA, honestly, but overall in trade. And so that's a little bit of a mega event for us on May 15th. Typically, we have at least once a week, we have an event that's going on that's really intended to help exporters, importers, and investors across border to be more successful. I know we have several events coming up around specific regions, the Middle East, for instance, on April 20th. We have events coming up on a variety of different things that you'll need to know as an exporter. Today's event, obviously, on financing, but we have events coming up on legal and logistics and marketing and a variety of other aspects of growing your business internationally. So thank you, everybody, for attending today. Thank you for your participation. These are typically recorded, as this one is, and then come up onto our blog. And so watch for that in the next week. Thanks, everybody. Have a great day.